Live at TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, Monsieur White. He named a house after me. That's how good I am. Anyway, we just had FOMC minute notes, and the market pulled back a little bit. I suspect that by the time it's all said and done, we're probably going to have kind of a flattish to a slightly higher close on the S&P cash. We're getting into that time where volume will be very light, 1.5 billion shares as we start the show, and I expect probably declining volume all the way into Labor Day. So it is going to be a quiet period, probably for the next 10 days or so. Expect lighter volumes, a lot of people on vacation. We can see it by how many people log into the den, just the other things that are easy to see. Of course, if I'm watching, I think I saw it probably the day before. I think it was Tuesday, maybe on Monday. Saw the release on just how many people were watching CNBC. Kind of a good indication of how many people are on vacation, how many people have kind of wandered off of thinking about the stock market at the end of the summer, mostly because they probably are on vacation. But, of course, everybody, the big names of the street are all in the Hamptons trying to get the last week out before their kids go to school on Monday. And just kind of a lackadaisical market. But, we're basically flat on the S&P cash, and not a lot of volume, a little bit of movement in gold on that movement. We're down $3 on the day, and I think we were up probably... It's probably what it is. But it may be a combination of things. Dollar index is up almost 30 cents. We are solidly above $82, which would suggest that we're going to 83.80 to test that high. I think it's 83.80. And probably going to put a little damper on this, but I think there is a little bit of trading going on at Jackson Hole right now with all the central bankers and the people of high finance. How come there's no people of low finance? There's only high finance. I wonder if like a pawn dealer, would he be low finance? All I know, I've ever heard of high finance. Anyway, the horse trading is probably just can you accept a little higher dollar out of here? I know you can't really move the rates up right now and scare the market, but maybe we can manipulate the dollar just a little higher here, and maybe the pound and the euro a little lower, and give our brothers across the pond, throw them a bone. And I think we are seeing that in that dollar index. Before, it's been every time we've gotten into that 81.50 range, it's been pretty much heavily manipulated to get it back down around 80 for a fairly long time. So as we watch that, I suspect, especially with as weak as Germany's been, and of course with Putin saber rattling, not uncommon to see the dollar move up a little bit here, but more and more when you read the notes, it is looking like if there wasn't an election, my guess is they'd already be talking about higher interest rates now. And my guess is that the first meeting they get a chance after the elections in the fall, we're going to get it. So maybe December, maybe January, we're going to see just a small tick. They won't poison the well. But they will give us just a touch, which will be enough to make everybody think they're going to continue to do it for a long time. And therefore, the market tends to be bipolar. It tends to be, what was that song? Fire, I've seen fire and I've seen rain. Great song about being manic depressive. And that's the market. It's either things are good and getting better, or things are bad and getting worse. There's not a lot of middle ground for the stock market. And of course, general markets all around. Everybody's either bearish or bullish. I don't see a lot of people that are just sanguine and off fishing. Generally, if they're around the market, they've got an opinion. But as we look at this and just see how this all settles out, where's my little note here? Oh, there we go. And so we were up maybe 3.5 points before on the S&P cash. Now we're up 1. So not that big of a reaction to this market. Probably the biggest one is gold, and we're off 460. I suspect that we've been working on coming back and testing that 1275 level. I've got a kind of jaded bear version of a play on gold, but to me, it's just how badly some of the gold miners are managed. And so I'm not expecting gold to fall off the edge of the earth. I'm just expecting that gold doesn't move anywhere. And the worst managed ones, I'm taking a couple of pot shots at. And so I'll at least I have a dog in this hunt. So as long as gold doesn't go up, I'll be happy. Doesn't have to go down, but just staying where it's in, probably going to be bad for a few of these companies that just can't produce gold. And I'm going to pick off a few of those, I think. Anyway, we've got a kind of an interesting day here. Of course, today in 1982, the stock market finished a week of shattering records right and left. Today in 1982, the Dow Jones Industrial Average soared 30 points. Well, we're already up 30 points here already today, with a thunderous volume of 95.9 million shares, closing at 869.26, up 81 points for the week. And that was 10.3%. And it was pretty much Paul Volcker's work that was finally coming true. And, of course, in cooperation with some of the new policies that everybody said it didn't work, seemed to be working extremely good. And, of course, revisionist historians will say that there was a lot of reasons why it didn't work. But, and of course, when he came there, what was the interest rate? 22% for a house. And it's continued to fall for the next, 1994? But it's a pretty good time, especially for when I got out of school, and how horrible it was for the business climate. And I think you can lay a lot of the bad business conditions at that time at the feet of people who didn't understand business. I think probably pretty good if we have somebody in the highest offices of our land that has at least run a business. And I think it pretty much, when we get people that don't, it pretty much tells what their idea is, and it tends to be book learning. I probably would rather have somebody that was running a street corner hot dog stand, understanding at least the business side of the United States, than someone who'd never been in business, never had to make a payroll, never had employees. So, just one man's opinion. Apple is everywhere. Of course, Apple did break its all-time high today. It was up at 101.10. And what do we got? 101.09, actually. Printing off here at $100.75. I think any close above $100.72 would be an all-time high closing price, not only an intraday price. But we'll keep an eye on it. Volume pretty brisk at almost 33 million shares. And again, as I've said, if you just came back from vacation today, I think I started talking about it a week ago on the Tom O'Brien show and the Tech Insider, and that is just this engine that happens with Apple, and that is the PR engine. They don't know when to turn it off, and it tends to, or you do tend to see all the price appreciation, or 99% of it, before they ever ship the product. They are extremely good at selling the sizzle, and why they don't specifically go after the stock price, it does spill into it because there are a great deal of people who really don't understand how Apple makes its money, other than they have very high margins, and it's very good business. But any stock can be overpriced. I don't know of anything other than maybe turning lead into gold at a nickel a pound that wouldn't be overpriced. But then eventually you'd have enough gold and it would be overpriced. So we'll keep an eye on it. But a lot of these stocks that surrounding Apple also moving fairly well. But we had a lot of earnings out here. So we'll have to look at it. Retail clothing, we talked about it Monday, and I said, boy, a lot of these charts look like they could pop. That look like they'd at least made some temporary bottoms, and maybe those kids were in rags that haven't been buying clothes for the last year and a half. But American Eagle Outfitters, of course, earnings on all these this week. And you can go back to my show on Monday where I covered all these. Said, boy, I mean, if there was one little sector that looked like it could bounce, it certainly looked like this one. A lot of them making lows on lighter volume. And up 9% just as the show started at 1263. I didn't look at it lately, but we'll take a look at it and look at the charts out here. But we'll have to see whether there's any real follow-through. I looked at the actual prices in a spreadsheet here. In fact, let me update them real quick and see. American Eagle Outfitters now up 10.6%. Aerospatiales off 1.25%. Of course, it had a huge run already. The Buckle flat. TGA Max up 1%. It got absolutely smacked down. Elizabeth Arden is the symbol on it. Up 5.5%, but of course it was down 20 some odd percent yesterday. Urban Outfitters up maybe 1% out here. So, some of these pull back again on lighter volume, or maybe you get a little retrace out of these. You can get another test of the lows on these things. I think it might be very interesting. I think we're probably going to see more people out here. We talked about bulk carriers yesterday, up 2%. SBLK again today. So we'll have to keep an eye on it. Just taking a quick look at some of these other ones. Microsoft's off almost 1%. Tesla's off almost, are these right? Let me update them. We'll be back in just a second.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Crossing the wires that I think are fairly interesting. And we talked about Argentina about, 6 weeks before everybody was talking about it on financial infotainment cable, and so I didn't talk much about it when they actually started talking about it. Notice that it hasn't hit the at least the zeitgeist of the cable financial channels yet, but basically Argentina, the gal that's running it, has told everybody to pound salt. And kind of interesting that doesn't look like she's in any mood to make any deals. In fact, going to basically invalidate everything, at least in her country. So look for another country to go down the rat hole of international finance. I don't know if that's actually going to make a big deal, other than the people living in that country that will probably live a third world existence for years to come, because if you're a socialist, you always run out of somebody else's money, and they've done it, and now they're not even willing to bite a small bullet to get it taken care of. Maybe this is a little posturing, but my guess is that they're not going to even worry about it. I think they've got elections going on down there. The other thing that is going along that no one's talked about is North Koreans moving their armies toward the Chinese border. That may mean that China's a little displeased with North Korea's new leader, and he may be trying to write checks that his rear end can't cash. Why they have a lot of soldiers out there I don't think they have anywhere close to the amount that the Chinese could throw up against him. And without them for support, it may be very troublesome. Maybe China's decided that it's not in their interest anymore to have a nuclear bozo next door. It was nice to threaten South Korea for a long time, and maybe even Japan by proxy, but maybe this guy is reading his press and starting to believe it. But when you see that, they haven't moved anybody close to the Chinese border since 1948. I think that's when China had its revolution, and they just moved some soldiers there just to make sure people didn't run over the border. But since 1948, I think they pulled them back fairly quickly, and then, of course, started the military engagement. What was that, 1950? Yeah, I think 1950 to 1952. But it is going to be interesting. Yeah, old Dennis Rodman is going to play basketball up there with his buddy. And, of course, there's a new movie coming out about killing the leader of North Korea. I think it comes out in September. I think it's called Killing. Well, I'll look it up during the break. But it's a comedy movie by a couple of those guys that have been cranking them out. So I'll try to figure it out. Killing. Yeah, it's about two guys that are acting as journalists and go up there and think about killing him. I don't know how. It's a comedy, so I can't imagine they actually kill him. But going to be interesting nonetheless. But China reacting, kind of interesting. Wanted to get into fairly quick on some of the stocks that are moving. Hertz had one of our loyal listeners. Well, I'd not thank every one of our loyal listeners, but even those that write me an email or give us a call, which you can do at 877-927-6648, or you can post a message in the den, or you can email me like this. A very nice gentleman asking about Hertz. He is an employee who was kind of wondering about what's going on. And, of course, basically they are guiding down, talking about some of the problems they're going to have with and selling the General Motors cars. A great deal of them have to have the ignition issue fixed, and they may have some liabilities also. There's some lawsuits out here. My belief is, of course, this thing opened about 27.5. It's up about 28.5 now, in that range. So it has picked up a little bit, but there are a great deal many calls after this to replace the CEO. My guess is that if you wanted to sell this thing, you're probably looking at waiting for him to be replaced. I think that the bounce out of this stock has a great deal to do with it. We'll talk more about it when we come back. Yeah, there's all kinds of horrible stuff going on at Hertz, and my guess is that probably going to be a few more weeks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, the S&P is up about 3 points. No big deal after the announcement, other than probably looking at a strengthening dollar. We're up 32 cents on the dollar index. Gold contract off $6 at $12.90.40. And it's going to be quiet, and I think you can make some money probably in commodities over the next couple of weeks. Probably going to be fairly quiet in the equities market. And I'm playing at least a couple of commodities on that. But I think you can see us kind of stumble a little bit higher over the next 10 days, and that's 2 steps forward, 1 step back. These steps are going to be rather small, and I don't think we're going to have huge fireworks. It would take something huge now, I think, with all the things that have hit this market with international intrigue. It would really take, I think it's going to take a nuclear bomb to actually affect the equity markets now. There's just, these guys aren't even going to be phased anymore on the upside. And you're going to get to a point, and some of these stocks already are out there where, you know, especially looking at things like Hertz, where you had this thing trying to buck above $29.81, which was that January 3rd high with 33 million shares, and went through it yesterday with 12.9 million shares, or the day before, 5.3 million shares yesterday, and of course, it opens up way down. Now, our emailer, whose name is John, I changed it to protect the innocent, but his real name, and he lives at 1313 Mockingbird Lane. Anyway, I don't know if I should choose his real name, but he says gap today is probably due to the rumors that the California managers are filing a class action suit as Hertz cut our bonuses, and now we only get 60% of it, which I don't think that they can do, which is probably a good reason to file a lawsuit, but they probably didn't think they could get away with it. My guess is they did it to make the books look better for the next quarter, and you'll probably get the cash anyway. Probably won't have to go too far with a lawsuit to do that. But what we're looking at here, and what I've heard already, you got Kramer from TheStreet.com out already calling for the CEO to get canned. And the guy was wondering, what could you short Hertz now? And the answer is no. And here's what I would wait for. This thing's probably got support in the $25, $26 range. Probably 2, 3, 4 weeks from now, you're going to have the CEO removed. You're going to get a big spike in it. And probably see a lot of shorts get squeezed on this. And then you're going to see no volume. And at that point, I don't know where it's going to be on price. You're going to have to look at it on volume. You can take a stab up there, but probably going to be a tough 6 months to a year for Hertz. So you'd be a long-term short on this, but you're going to have to wait for this thing to pop up and get ready to come back and test these lows. But 24.82 is probably where this thing's headed over the next few weeks. Then look for a pop. Maybe come back and fill at least part of that gap back up to 29 on a short squeeze. And then I'd probably be looking for that light volume day where this thing goes sideways for a few days. Margin players are out on this, and then you get at least a chance to go back after it. But it would be tough. Now, when we've been talking about a quiet market out here, there is an easy way to make 40% on your money right now. That is, go to the front page of TFNN and check out our Tiger Dollar promotion. This is the best promotion ever that I can remember. Spend at least $500 and get 40% more added to it, so you can use it for any of my newsletters, which I have 2, and or you could also get the Art of Timing the Trade software. Any of those are available. Any of the things that we have at TFNN, you can get at and use your Tiger Dollars for. So a great way to get a subscription of any of mine or others of our hosts out here and get some cash out here. So check out that Tiger Dollar promotion today. I don't know what you'll be doing. Maybe you'll sit down when you get home tonight and you'll feel the cool air conditioning hit you, and you know it will be time to get over to that screen and start signing up for those Tiger Dollars now. Anyway, we were looking at some of these other stocks moving out here, and got a request to look at the TLT. This is kind of an interesting move out here. You've got a little bit of pullback to the support level at 115.19. Certainly looks like that's where we're headed. Let me get a current quote on TLT up here. Okay, 115.71. So you got about, 60 cents lower on this before it would find a support level. You got a lot of congestion, too, from, July 17th through July 29th. And you're in that area already. So a lot of congestion. But probably going to find support at 115.19 on this. And my guess, energy was not all that bad in the TLT when you look at my power law vector indicator. So it could be worse. It was not very good off this July 3rd low for the first 10, 12 days. But this last little leg where we started seeing some volume come in, and you got a high volume high at 118.36. So wouldn't say that you'd do anything other than test that 118.36 again, and you are back here at support. So you got a kind of a narrow trading range if you just look at the chart. And of course, I'm not a big bond guy. I look at the charts out there. I'm more of a tech guy, and I like kind of playing around with the commodities a bit. But I kind of like to know the story and how something's working And to me, the bond market is an infinite, what can you say, an infinite black hole of trying to figure out what all these knobs at Jackson Hole are going to do. Some of the other stocks moving out here today, IDEX Laboratories, IDXX, big volume coming down. Looks like it's going to come back and at least go back to the 121 level where there's a nice gap. That gap occurred on April 25th. And, of course, not a great deal of support there. So you could see this pulling back all the way to 115.84, which is the April 15th low in IDEX. We talked about American Eagle Outfitters, and, these things are highly shorted, like JCPenney, so they can bounce for a day. I would certainly like this thing to come back probably in that $12 range and go sideways for a little bit before I'd even think about playing it. But there are a lot of these stocks that are highly short, and you could see some big short squeezes in these stocks over the next 7-10 trading days as the volume is low. Celgene Corporation out here making another high. I think there was some news on it, but kind of seeing this thing get up to these highs, especially when we look against some of the previous highs out here. You can see how the volume is starting to dry up. The July 3rd high had 5.9 million shares, and we're kind of breaking through that. You had 5.3 million on the 18th. On the 19th, you had 4 million shares, and today 3.2 million shares, but looks like it could duck back in here. So I'm not looking for a huge breakout the next 10 days, but I am going to look at a lot of these stocks, especially ones at highs, start to squeeze some of these guys out. Garmin had earnings, and boy, talk about a wicked candle back here from the 30th. This thing's up a little bit, but without a lot moving out here significantly. Gave a great deal of that pop out here today, up to $57.84. Certainly looks like you want this thing to come back to the $53.78 level, and take a look at that. Got a question from Wayne from Texas. Tesla first short, TSLA. I would like to see Tesla come back up here to 267 and probably spike up on one day on news to 280. I still think you have a good shot out here. What I don't see, and what I wanted to see in Tesla that I have not seen yet, energy, especially if you look at this 177 to 244.49 high from June 30th out here, had some good energy. At least relatively. 6.8 on my power law vector indicator from that move from May 9th all the way up to June 30th. Now you get a little retrace to 213.60, which is the July 17th low, up to this high on August 18th, and 6.2. So in my power law vector indicator stuff, I want to see that probably at a 4 or a 3.5 before I would have pulled the trigger on this. Basically, it's this coming back to this gap between 248 and 256 from, 811. So we've seen that. It's back into it today with light volume. My guess is you're going to see some kind of spike. You're going to see all the shorts run out, and you want to see the volume just drift out of it. And my guess is if you watch this thing intraday, what I'm looking for is a pop, probably 270, 280, something like that. And you're going to have the first part of that move have some volume, maybe up to 270, 272. The last half of that, you're going to see no volume. You're going to see the thing tick up a buck, buck and a half, another buck. And that volume is just going to absolutely go to nothing. And that's going to be the short squeeze. You get up to about 280. If that volume is still nothing, close your eyes, set a stop, and pull the trigger on this thing. My guess is, though, you really need to see a light volume move, and I haven't seen it other than this thing pulling back for light volume, but I think we've been talking about it for a couple of weeks. Normally, these kind of cult stocks have a exhaustion move to the top with very light volume. It starts off with good volume. Then you see everybody trying to sell into that, and then you see the short squeeze at the very end of it, and then it just fails. And shorts, or at least highs like that, don't have to be tested. But to me, you need a market that's moving down for these cult stocks to fail. And right now, we don't have that market moving down. So that would be the other half of the equation on some of these high flyers out here. You want a market that's failed. You don't want to be taking a stab at these things while the market continues to creep up. And, we're up 3 points on the S&P cash. No big signal out here. A light volume. And as they say, you don't want to short a quiet market. Now, remember one of the biggest moves we ever had down was on news, and that was 9/11. And maybe we do get one of those kind of things out of the blue, but it's not something you could predict. And if you looked at the charts for 9/11, you would have said that the market was weak, but you wouldn't have found anything in the charts that said pull the trigger that Monday morning and wait for Tuesday morning. You wouldn't have seen anything on the close of Monday. In fact, I remember standing on a place that on a home site that I was going to buy later on 9/11, and I didn't buy it till like many years later. But standing on the concrete where someone had poured the base, the foundations, and just knowing that I had to get back to the airport by about 6 o'clock to catch my flight back here to Tampa. And I was looking at the charts. I knew it was weak. I had a very small portion of my portfolio that I had in calls. And, of course, they all evaporated to nothing the next day. But my thought was that, could we go up for the next couple of weeks? I was looking for some kind of turn in the market mid-September. Of course, we've had our biggest down moves many times in September. So I would just say you want to be waiting till you see the whites of their eyes. You don't want to be getting real brave here, I think, on the next 7 to 10 days, which is about, 7 trading days, especially with the light volume. I think if we came back from Memorial Day, you got probably 2 or 3 days where you're going to have light volume. The first is, of course, Labor Day. You come back, you got a short week. I think we're probably going to still see some people on vacation. That Monday after, we're probably going to start seeing volume. And if I was going to be pulling the trigger short right now, that would probably be the time window where volume is going to pick up. And if you're going to see weakness, that would be the first opportunity, at least in my opinion. I would just kind of stay out of this. When we look at silver out here today, it's up almost 7 cents, so a little bit better. And gold's gotten a buck up off its low at $12.91. And probably going to continue to see the big bulk of movement out here in commodities. We've got crude, West Texas crude up $1.60, and the dollar index still up 32 cents. When we come back, we're going to talk about the Momo effect from Apple and GT Advanced Technologies. This one came back a little bit lower than I thought and got the washout. I've never heard back from the caller on this one. Maybe she'll call in to this last segment, but take a look at it.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we talked about GT Advanced Technologies. I think someone was calling about it, probably right back in here where they were asking if it was going to go any higher. I didn't think it was going to. Part of the reason is that these guys make the ovens to make sapphire crystals for all the new Apple devices. And it's fairly tough. It's not like you just buy one of these ovens and make your screens with sapphire. Getting it to work is pretty much a patented thing from Apple. Not going to be easy for other people to buy it. And, of course, it's going to be continually expensive. But Apple's going to probably burden themselves with a higher cost, so no one else can have it. You're going to say, hey, we have sapphire screens, no one else does. And, of course, not going to be easy for someone to duplicate it. And then, of course, there's the whole patent issues. That means that all the ovens to create these crystals that GT Advanced Technologies made sold to Apple, going to be kind of hard for them to sell all those ovens to somebody else if they can't use it. So I thought that almost all of this big run from GTAT had been, it's kind of in the stock. Now what happened is that Apple was behind on production. They asked GT Advanced Technologies back here at this somewhere around in these lows, I think when this thing gapped up, to help them since they have their own production facility, I think in Arizona somewhere, they needed help, and it's unclear how much real business they got from Apple, making some additional screens for them. But they wanted to get at least a pretty big load so that they could, when they kick out the next iPhone, they would have it all ready. So this last big move out here, kind of a big guess. But the comments from earnings pretty much are probably true. That is, it's going to be very hard for them to get anybody like Apple to come buy a few $100 million worth of ovens to make Sapphire screens in the future. This thing came down with 32 million shares on the 7th of July, and we're back up to it now with 13 million shares compared to 32 million shares. So not a big idea that we come back here, hit this gap, pull back a little bit here today. But I'm suspecting that the PR blitz on this and the fact that most people are not really looking too deep into this company and actually how they make their money, selling ovens to make these crystalline structures like Sapphire, mostly for solar company and solar cells. Not too many people other than Rolex making these for actual lenses for any kind of wearable device or usable device. So keep an eye on this. But my guess is that this is like a lot of these stocks. Right after we see these, the Apple probably hit its high, whatever that is. I'm going to be looking at this one very close because it's just going to be very tough to get the swan song again like they've had. Of course, after the bell tonight, as we look at earnings, you got Hewlett-Packard. I was trying to get a look at the options for this thing, and do I have enough time? Ooh, maybe not. Let's see here. Okay. We want to look at HPQ real quick. Okay. It doesn't really, no one really knows. Looks to me like they're saying $1.50, probably up and down. So not looking for a big move, at least in the option market. They had pretty tight options. So we'll see you tomorrow. We'll see how HPQ did. HP after the bell tonight. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.